That is...
Thanks for your time.
Thank you. Thank you for being with us. That is Cyient. There are a lot of emerging growth areas and they are committed to that $1 billion revenue run rate. Deven Choksey is still with us. Deven, particularly on Cyient, how does the risk reward look at 800 rupees?
I think, Sonia, maybe a couple of quarters, I think one will have to wait for this company to give you a real appreciation if you buy at current levels. But I think the game plan remains absolutely intact. Again, for this company, a niche player operating in different segments, be it healthcare, be it railways, and also providing, I think, the embedded softwares, I think, to various segments, which is basically, I think, making this company, I think, a niche player in the respective verticals in which they are operating. The potential point of view, the company remains absolutely intact. And as I heard the management, I think they're confirming that they would be achieving the $1 billion run rate in FY24. So that again, I think, says that the business plans are intact. Maybe the market expectation is that I think they would achieve little ahead of FY24. But that could be the only spoiler as far as the stock price is concerned. Otherwise, I think those are looking at long-term investment. Maybe I think this could be a chance, I think, if market gives correction at a lower price due to whatever the expectations not met.
I mean, if what the management said and they achieve all of it, investors are going to be happy. It's a company in that much wanted ER&DI space, but hasn't performed anywhere close to what others in that space have done. Remains the cheapest, actually would be the cheapest, maybe around after Zensar in the overall IT services space. All right. Just a quick word, if you will, on Paytm. We discussed Nykaa. Any thoughts on Paytm? And we saw a 10% correction yesterday.
Yeah, Prashant. I think, basically, they don't have any particular niche as far as I think the business model is concerned. And I think the business model has become almost like a commodity now. So from a perspective of, I think, now looking at this company from investment, I think one will have to look at, I think, how they can make profits. And as I have communicated a little earlier also, I believe that I think this kind of businesses probably gets created to get absorbed into some of the larger players as an integration play for them. So, and a strategic fit, I think, for some other companies which are largely into e-commerce, which are largely into payment services, it could be very high as far as I think Paytm is concerned. So that could be one possibility that one cannot rule out. Corrective prices and the fall in the market capitalization would make it even more attractive. So I would rather wait for, I think, the bottom to get hit, and probably that would be the time to look at this company for a strategic acquisition by some larger player. Yes.
Okay, all right. Deven, the question is, when does it become attractive? That's $1 million question, and a lot of fundraise before the IPO. So clearly some people found a lot of value, but now it's way below even those levels. So we'll keep that aside for now. What about the pharma space? Oro Pharma, the bad news continues. The stock's at around 450, 460 rupees. Valuation-wise, it's always traded at a discount. But what do you do with it? Is at some point of time, do you see some value emerging in this one?
Sure, we don't, I think, track, I think, very actively this particular company. So would not give recommendation kind of view in this particular company. But in general, the pharma space, we find some of the larger players like Cipla, companies like Sun Pharma, who are into the specialty generics business, I think, and have relatively better portfolios to talk about, are basically looking more clearer to us. I think on one side, the margins are basically remaining maintained and sustained at higher levels. And on the other side, they are seeing the visibility of better revenue. So the larger players like these companies probably are better placed in our view, even though they may end up giving appreciation of around 15-20% in a year. But I think that would protect your capital in portfolio far more than I think some of the other companies which may probably remain most vulnerable in a challenging situations, particularly US FDA, margins, etc.
Okay, Deven, just stay on. We will come back to you. We need to take a short commercial break. We have about 15 minutes to go before